As someone with over 25 LLCs, I have made a ton of mistakes along the way, some of which have cost me millions of dollars. And the truth is, most people starting an LLC have no idea why they're even doing it, what the tax reasons are, or how it even affects them liability-wise. So, in order to get those questions answered, I brought my partner Matt Bontrager from TrueBooks in to answer this. What's up?
What's up, man?
All right, first thing, explain what an LLC even is and what it does.
So an LLC is a limited liability company. A lot of people think you set up LLCs for tax, but you don't. It's a legal move. And the reason is when you go into business or buy a rental property, someone will potentially sue you. And so this is to separate that liability from your personal assets to the LLC.
So if you guys do something weird at TrueBooks, right? Somebody sues us at TrueBooks, but it's not going to affect me over here in my other companies or my personal life.
Exactly. They would ideally come after TrueBooks, the LLC, which what does that own? It has some cash, it has some leases and assets within this business. And so ideally they would only get what's in this business.
That makes sense. So what's the first step to starting an LLC?
So the first step would be to create the LLC in the state where you're doing business. A lot of people think you need to go to Wyoming and get an LLC there or in Delaware. I'm no attorney, but most attorneys will tell you to get the LLC where you're doing business in the state where you live.
Yeah, the good thing is for us in Vegas, Nevada is one of the most protective states for LLCs. And so I have seen a lot of people open up Nevada LLCs, like you said, Wyoming and Delaware. Those seem like the big three.
Exactly, yeah. So what those other states can provide you is when you set up the LLC, they can make it to where your name is not listed on it. So sometimes if you live in California, you'll set up an LLC in California and have your Delaware LLC own it. But again, if you're looking to start a business or set up a rental property and you don't need any weird anonymity, set up the LLC where you live.
So second thing I hear about LLCs are your structure. So what does this mean? What's an S Corp? What are these different structures?
When you set up an LLC, you're what's called disregarded to the IRS, meaning you're nothing. You're not going to set up and file a separate tax return. All the activity for that LLC is going to be reported likely on your personal tax return. So when you first set it up, it's what we call a single member LLC, which is, again, disregarded to the IRS. You don't file a separate tax return. The next step would be if you set up an LLC with someone else, like a partner, you're likely going to be defaulted to a partnership. Next would be the S Corp, what most people hear, and they get tripped up with thinking, well, wait, do I need an LLC? Do I need an S Corp? When in reality, most of the time, those are the same. Yeah. And what I mean by that is all you're doing to get an S Corp is telling the IRS, hey, I have this LLC. I would just like to treat it as an S Corp. So notice you already had the LLC set up. So we're really running through the 4 ways to be taxed. There's single member, which is disregarded. There's the partnership. There's the S Corp. And then you have the C Corporation, which large public companies, you potentially want to be traded and sell stock and things like that. So, but when you initially set it up, you're disregarded and likely just a single member LLC.
Right. And so like at TrueBooks, what are we?
TrueBooks, we're a partnership.
We're a partnership.
Yep. So we're an LLC. We're a multi-member LLC with 2 members, and we own our pieces respectively.
But this is different than a normal partnership that's not an LLC, right?
Exactly. So there are entities that you can set up in the States that are partnerships, limited partnerships, or general partnerships, and they're not LLC. There are options to set up a domestic corporation, a general partnership, or
that's
bad. That's not what you want.
Why do they even allow that?
Well, right. So I assume that there's certain scenarios where they make sense, but again, far and few between. The LLC is what most people are going to want.
Gives you the protection against being sued. I mean, if you're in business, you're going to get sued.
What's very important and what most people forget is once you set up the LLC, you need to get an EIN number, which is the employer identification number. Think of it as a social security number for your business. They're free. You do it right on the IRS's website.
Right. And anytime anyone asks you for your business EIN, that's what you're giving them.
All right. So what do we say the third step of any business is? You set up the LLC, you get the EIN, you get a bank account. For you to even get a bank account, they're going to want the LLC documents and your EIN documents. When you're setting up your EIN, you're going through the questions. It asks you maybe 10 questions. It'll ask you, how many people are in this LLC? If you put 2, it's automatically going to default you to a partnership.
Right.
It sees that there's 2 of you.
And speaking along the lines of partnerships, I think it's important not only from the structure on the LLC and the percentages, but to just define roles, right? if you're going to go into partnership with somebody, you got to really know who's doing what. You know, when Matt and I first started TrueBooks, this was at the end of 2019, I think, when we incorporated, we were very clear. I was like, hey, I'm going to be the guy who's the face, who's promoting. I'm going to bring the clients, and, you know, that's my role. You're going to run the day-to-day, the bean counting, hiring staff, managing everything behind the scenes. And, you know, even to this day, that has been the structure of what we do. And it's allowed us to grow very successfully because we were very clear from the beginning what our roles were.
And that all takes place in an operating agreement. So even for us at TrueBooks, when we bring on new clients that are in partnerships, we ask them, show me the operating agreement, because not only does the operating agreement tell me what this person does and what that person does, it tells me who owns what, who's put what into the business, what the tax matters are. And so that's where, when you set up a partnership, it's a very good idea to have an operating agreement in place.
Yeah, especially if somebody put in more money than the other at the beginning, and they were going to get reimbursed later.
What your splits are, all of those agreements are documented in that. And right, you always got to have the worst in mind when drafting them, but you need to do it.
Yeah, I remember every other operating agreement I started, it's pretty cut and dry. Matt's like, hey, I got to do this and this and this and this.
This one was a little bit weird, right? Because we're licensed by the Board of Accountancy and stuff. But yeah, right, it had a lot of language. We paid another CPA attorney to draft part of it. So that's where, this one was pretty convoluted. But as they should be, right? As the deals get larger, as the partnerships get more complex. Because as you mentioned, you can go out and you can start a flip business or whatever kind of business, and you can get a template online. Yeah. And that's fine.
Well, and if you're a single member LLC, the operating agreement's kind of irrelevant, in my opinion.
It is, because it's basically you setting your own rules for yourself.
But the moment you have a successful business and you later want to add somebody, then you need to start taking it more serious.
Exactly. And that agreement is signed by all parties. We have some agreements with 10, 15 partners.
Another thing I've seen with LLCs are registered agents. What exactly are those?
So a registered agent is somebody that's listed on the LLC, and really we'll call it the person that they would communicate to, let's say if you were being served. So if you were going to be sued, who would they serve the documents to? I'm a fan of being your own registered agent, unless you want to pay a company to do it for you.
We have our attorney as the registered agent.
Exactly, which this is what I tell people. If you're going to pay for a service, make sure they do this, which is you're going to get a ton of mail the second you set up this LLC. And so they'll collect your mail, they're going to scan it all in for you, they'll email it to you, and those things. So if you're going to set up an LLC and not pay for a service to be your registered agent for you, I would just say be your own registered agent.
So when do you think is the right time that someone should actually set up an LLC?
I tell people, if you are in the pursuit of making money and you're about to start really taking things seriously, making contacts, spending money to make some money, maybe on advertising or things like that, I would set up an LLC. I don't care if it's a lemonade stand. I would set up an LLC.
Yeah, I'll give you an example. We are rebranding companies and starting all these new companies under the Wealthy name. And so I just opened up LLCs for Wealthy Media, Wealthy CRM, and we don't have the business yet, but I know it's coming and we're working towards it.
Exactly. And so that right there, right, getting ahead of the curve, and one, locking down the name, because there's also, you can't have two LLCs with the same name in the same state. So if it's a naming thing too, you want to lock it down that way.
How does the DBAs work?
DBAs are
doing business as.
Doing business as. So if I am XYZ LLC, but somebody writes me a check for Matt Bontrager's car wash, because let's say I wash cars, the bank would not cash that. My bank account says XYZ LLC. Nothing says Matt Bontrager's car wash. But if I had formal paperwork with my state that said, hey, Matt XYZ is doing business as Matt Bontrager Car Wash, I now can use that name.
You can get paid either way.
Exactly. So it's really, from what I've seen most of the time, for banks, because now banks are like, okay, I know you're formally operating as this name too. You're not just stealing Matt Bontrager's check and trying to cash it.
Yeah, that was one thing we just recently changed with Future Flipper was, we kept the LLC because we've had it. It's built up, history.
Banking relationships and all
everything.
That. Yeah.
And so now we have to get an official DBA as Wealthy Investor since our name change.
Exactly. And that's what most of the people will do sometimes is you don't need a whole new LLC, maybe just a name change. And you can amend the LLC too to change the name potentially too. So there's a lot of other avenues you could go.
So I understand how to start an LLC and how to get it to where it is today. What are some mistakes that you see people make?
The first one has to be the timing of setting one up. they're either setting them up too late and they're already far enough into their business where they're sitting on liability that they shouldn't have. But another reason would be, let's say you start a business venture and you're going to make way more money than expected. And we think as a tax strategy, you should have an S corporation. Well, what do we need to do? We need to set up an LLC. We need to tell the IRS to treat your LLC as an S corp. And the problem is, let's say it's already November and December and you've made all this money through October and with no LLC. We technically can't lump that income that you just made under this LLC that you just created because the IRS wouldn't allow it. They would say, when you made that money, you didn't even have an LLC, so you can't report it under that. So the timing of when to set one up, you need to speak to an advisor for, or make sure you have the clear-cut answer.
So what about treating it separately? Because if you're, got this LLC, doesn't it need its own bank, its own records and all that?
Exactly. So again, back to those steps, set up the LLC, get the EIN, get the bank account. Step 4 is the accounting software. No matter what business, your first or your 10th, you're going to do those 4 things. And so what a lot of people do, most people, this is their biggest mistake. They don't treat this as a separate entity. It is its own living, breathing. It has money in, money out. And so it's its own entity. You need to now keep track for this entity and all of its activity separately. So that's why when you hear the term, don't commingle. You go out to dinner and it's a business dinner, use your business card or that business bank. Don't use your personal bank account. So keeping things separate and treating that as its own entity is very important.
So another mistake I see a lot of people making is LLCs with real estate. Some people are like, oh, you should put every property you buy into a new LLC. You see all these things. Like, what are the mistakes you see in regards to real estate?
So back to that timing of when to set one up. Let's say you're a flipper and you have an LLC and you're doing business in this flip entity. You've set it up, your income's going to this flip entity, but you decide to buy a rental. And most people would think, well, I have this flip business. I have relationships with banks. That's where I'm finding my deals. I just came across a deal that I want to keep as a rental. It would be very bad to buy the rental and put it in this same entity, this same LLC that's an S corp. And so right there is not knowing when they need another LLC. Because I'm never a fan of just willy-nilly, like you said, setting up these LLCs per property and things like that. But in that case, if you're in the real estate space and you buy a rental and put it in your S corp, it could hurt you tax-wise. So knowing when to set up new LLCs for new ventures is very important.
So what happens if you do make a mistake? You don't purchase it in the correct LLC. And so now you're going to go deed the property over to the right place.
So I would say that's fine. The only thing that now you've done is you've increased your risk of what? The due on sale clause. When you took out this original note, assuming it's not hard money, the bank technically assumed that this LLC, your first LLC, was going to be on the hook for the debt. Now you've transferred the property out to this LLC that maybe your son owns, to your trust, whatever. And they're thinking, well, who is this? We didn't give the loan to them. So you could potentially trigger a due on sale clause, you could say, by just moving the property out.
That makes sense. But what would you say to the people that say, oh, I need, 10 LLCs for my 10 rentals?
So I always tell people to take a risk-based approach with this. So for example, if I have 10 rentals in Vegas here, and they're all in a good area, and I have tenants that aren't causing me trouble, it would be fine to keep them in one LLC. It's not going to hurt me tax-wise if I don't, or if I split them up. It doesn't help me or hurt me. When I would consider setting up more LLCs is if maybe I have 4 of these 10 rentals, they're in bad areas, I have rowdy tenants, I have problems, and I don't want something to happen in one of those and then have them come after the LLC that owns all of my other ones. So you could see how if I had a bad group of rentals, I would maybe just parse those out and put those in their own, or I could separate them into their own individual LLC. So you can see there's no right answer. It's really what's your risk appetite.
I'll tell you, for me, the only times we get new LLCs are for our syndications, right?
Mm-hmm.
We get a whole new
Exactly.
LLC for that fund, for that property, because they're such large deals.
Yep. Right. And so that would make sense because that's almost its own project. It lives, it dies with that project. It's not like an open pool fund where you're just consistently taking in more money and buying assets. This entity was formed for that deal.
What's the biggest mistake you see?
People don't file the right tax forms for their LLCs. When we were talking and you're setting up your EIN, if you put that there's 2 people, the letter that they give you right then and there says you have a federal 1065 form, that's a partnership return, due March 15th, and it'll tell you the following year. So if we did it now, it would say you have a form 1065 due 3/15/2023. So many people ignore these, and here's the problem. If you're late on a partnership return filing, it's $210 per partner per month that you're late. So if you set up a syndication deal with 300 partners and you're late and don't file the right forms, you could be looking at substantial penalties. So one of the biggest issues is when people set up LLCs, they don't know where to report the activity. And so again, speaking with an advisor or your tax accountant, you need to be set in the right direction. So, hey, I have this LLC now. What do I do for tax reasons? Where does it go? Where does the activity go?
So hopefully you don't make mistakes when you set up your LLC now. And if you want to see a full interview that Matt and I did, make sure you click this video right here.